Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to the bigger picture. Me, Ryan Huang. We are seeing U.S. stocks strongly rebounding after a rough start to the year, hitting new all-time highs. And the question now is, are markets too complacent or is the rally justified? And this in the backdrop of how we are still seeing a lot of uncertainties in the background and also looking at tariffs as well as geopolitics in the mix. So we've got a lot to talk about as we head towards the rest of the year. And helping us out is Quek. He is the Senior Portfolio Manager for Paragon Capital Management Singapore. Sean, good morning. How are you doing today?
Good. Hi, Ryan. Thanks for having me again.
Hey, great to have you on. And we've got a lot to unpack as we kind of look at what's been going on in the markets. So to some degree, it has been better than expected. Are you surprised, though, by the level of optimism in the markets right now?
Yeah. Well, obviously, the markets have done very well in the last 2 months, especially after Liberation Day, right? I mean, obviously, the market was in April very worried about, what Trump is going to do and how that's going to affect the economies as well as the stock markets. But yeah, so clearly there's a lot more optimism now. I think the market sees that, what Trump was trying to do is more a strategic move in order to negotiate rather than to the extent that he's actually not thinking logically, because obviously this trade war it can be very negative on the US economy as well. But I think at the same time, what you're seeing is also that the economy, if you look at the US economy in particular, actually has held up pretty well as well. I think that has helped, provided some optimism to investors.
Yeah, some folks came up with the buzzword taco, Trump always chickens out, as a bit of a way to describe how it was all part of his playbook to just scare folks into a deal of sorts. So looking ahead, are you more optimistic? How much more upside are we looking at when it comes to the market action?
Well, I think there are a few things to look out for. Obviously, the markets have become a bit more optimistic in terms of what the Fed is going to do as well. And again, that's going to be one of the main drivers. Of course, for us, what we're focusing on is, on one hand, on the demand side for the economy in terms of how much this uncertainties that we've seen in the last few months is contributing to confidence in the economy, what the companies are doing. We have basically seen companies cutting headcounts as well. I think that's going to be, something to look out for. I mean, even big players like Microsoft, right? So that's something to look out for. On the other hand, in terms of the inflation impact as well, I think those two are going to be sort of counter factors to look out for. Having said that, again, we feel that, while some segment of the markets in particular, within the US, say the AI space, I mean, some of the names have recovered very strongly. But having said that, so what we are looking for is there are other names that we feel can actually provide value for investors still at this point in time. So within the US, I would say names that are trade related because of, again, the concern on 9th of July, how this thing is going to play out. But what we can see, the latest being Vietnam, is that the Trump administration is clearly out there trying to cut deals. And that actually has provided some short-term optimism as well. So I think the trade-related names have been weighed down by this trade tariff talks. So I think there are opportunities there. We are, for example, in our portfolio position there as well. In the last few days, actually, we have started to see some of these names recovering strongly. Besides these names, outside the US, for example, if you look at chip stocks, meaning semiconductor-related names, the US names have done very well outside of US. So if you look at in Asia, for example, in Taiwan, in Japan, some of these names, again, because of trade-related concerns, they've been weighed down. So we are more positive on some of these opportunities as well. So we think that, while the headline index level and some of the big names, they are actually hitting all-time highs again. But we feel that below, actually, when you go deeper into the market, there are actually opportunities as well.
Yeah, so that's to get folks up to speed with what's playing out with Vietnam. So a new trade deal that involves a 20% levy. That is lower than the initial 46%. So in some fashion, it's good news for those like Nike retailers, for example, which would import from Vietnam. And Microsoft overnight talked about cutting 9,000 jobs. Despite it being profitable, it's resizing itself in order to be more efficient in some sense to a more AI-driven future. So a lot of things playing out on that front. One of the stocks you've got your eye on in the tech space is TSMC. Sean, where is it going from here?
Yeah. So again, we continue to see demand in this space. Obviously, companies are rushing to continue to either invest from a capex perspective, and also at the same time, the user side, we continue to see demand picking up, where companies trying to catch up with this trend. So clearly, the big player here is TSMC, and we continue to believe that the stock is trading at a discount to its peers and also where we think it should be. And again, as I alluded to earlier, it's not just some of these really big names, but for example, in Japan, you have companies like Tokyo Electron, which actually is one of the key players in the space as well. But again, they tend to trade at a discount to the US names. So we do feel that the US market is leading the way, but at the same time, there are actually opportunities in some of these other markets as well. So this is how we see it going forward.
Yeah, I'm also curious on the FX dynamics when it comes to TSMC, because we've seen how the Taiwan dollar has been performing quite strongly, at least against the US dollar. How does it affect a company like Taiwanese company TSMC? I mean,
short term, you're going to see some impact in terms of FX, but overall, in general, from an investment perspective, sentiments tend to be better when the US dollar is not too strong, so that the US is not attracting too much of the fund flows into the US. In fact, if you look back in the last few weeks, again, as you pointed out, so some of the emerging markets actually have been doing well, partly because of the weaker US dollar as well. So there's a bit of, sort of, again, counterplay here, but I think the key thing for these companies is that their products continue to be in demand, and basically these are basically the biggest players. And when the demand comes in, there's really very limited in terms of where the supply can come from.
All right. But talking about demand, this is part of the equation as well. China. So you've got your eyes on Yum China, which I believe is in the space of restaurants such as KFC and amongst others. Where is it right now when it comes to the appetite for spending in China?
So what we're starting to see is also the economy seems to be bottoming. And for example, one of the indicators that we look at is that the salary of new economy workers has started to pick up after a few years of decline. So there's a bit of a, again, undercurrent where certain segments have started to recover. And going back to a company like Yum China, which is operationally very strong, and of course, a much bigger player within the China space, what we're seeing is that the big boys are starting to gain market share because of the slowdown, restaurants have been affected, and some of the smaller players have actually left the market. So actually the big boys are gaining market share again.
All right, appetite for Yum China, so something we'll be keeping track of as well besides TSMC. And helping us out this morning, Quek. He is the Senior Portfolio Manager for Paragon Capital Management Singapore. Sean, thank you so much for your time and insights. Always great chatting with you.
Yeah, thanks, Ryan.
All right, catch up
again soon.
Next time.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.